Hi, and welcome to Dealbox Daily, episode 11. I'm Brendan McShane, and I'll be your host. We go through the latest crypto and blockchain news so you don't have to, covering everything from blockchain, digital assets, and fintech. Dealbox will help you with your private placement, alternative investments, and category design. So please watch the live stream, listen to our podcasts, and read the blog. If you want to learn more about Dealbox, follow dlbx.io. And let's jump right into Article 1 of Episode 11. Walmart is looking for a crypto product lead. The ad firm is seeking a visionary leader to fill the so-called digital currency and cryptocurrency product lead position. The person would create a digital currency strategy for the next big office store. This is coming a few weeks after Amazon has decided to also post a job listing for a cryptocurrency lead. Walmart is a little behind, but they're also going to be following in Amazon's footsteps in this because they want to be as competitive as possible in an upcoming environment. Amazon may be falling behind on a couple of things, but I know that this year they're definitely going to be listing their Christmas products a little earlier than Amazon. Now into the next one, probably the most annoying thing that we've all had to deal with. And no, I'm not talking about when you rip a sticker off a new product and then have to scratch at it, hoping that little piece that you get stuck on comes away and then you just move on with your life. No, I'm talking about Captcha. Human Protocol is bringing Captcha to earn to Ethereum. Not as fun to play to earn, but hey, it's something. Many users will recognize human protocol's HCAPTCHA on websites that as a thing that forces you to identify fire hydrants in a picture grid. Google's reCAPTCHA is the market leader, though, that is the centralized upstart is gaining ground. So CAPTCHA first started as a problem that Yahoo had when they had robots making too many email addresses. And then somebody figured out that the computer cannot read strange script fonts and then utilized that to have everyone start programming in the New York Times old articles and digitalizing them. And they're now offering payment for that service, but you've been doing it for free this whole time without knowing. It may be one of the most boring jobs ever, equivalent to working as a toll booth operator, but hey, it might pay the bills. And maybe one day this will be connected to every website, and maybe you make a few pennies every time you have to log in. Next, something a little more fun. Augmented reality-based Dogemon Go Mobile game allows players to earn Dogecoin. There's a new mobile phone video game that leverages augmented reality and the crypto asset Doge. The crypto community caught a whiff of Dogemon Go last month when the project's official Twitter page started tweeting about the new game. You can see here that a couple of the screenshots from the game looking a lot like Pokemon Go, which also is the last time I probably had world peace was summer of 2016 when everyone's running around like crazy trying to catch Pokemon. This is definitely a catch grab of using the Doge product as a face and may not be hugely successful, but seems like it could be something fun to do for the summer. Galaxy Digital joins $50 million raise for crypto staking firm Figment. Prior to funding, the company said it experienced 20 times quarter-over-quarter growth and hit over $7 billion in digital assets staked to its infrastructure across over 40 networks it supports. The proof-of-stake industry has faced explosive growth this past year through Ethereum 2.0 and other proof-of-stake layer 1 protocol launches like Polkadot, Solana, and Terra, the company said. The desire to earn a real positive yield from staking was one of the main factors for the expected growth of the industry. Over the past few days, Solana and Terra have both been almost hitting all-time highs, with Terra actually hitting all-time highs. And with Ethereum 2.0 coming out, users have staked over $14 billion in coins. Coinbase is expected to make $200 million in revenue by 2022 using staking. And JP Morgan has come out and said that by 2025, they believe that the staking industry will be a $40 billion industry. This is something that institutional investors cannot look away from. If you think really about it, you're able to hold an appreciating asset. And right now, it's just sitting in your wallet doing nothing for you except appreciating. And you can take it and gain a yield on top of that appreciating asset as you would in a fixed income security. So this is something that is generally newer to the crypto community, as proof of stake has been proven to actually work now, and it will just continue to explode further and further and further as positive yields are being shown through staking. And lastly, Twitter, though, taps crypto developer to lead Blue Sky decentralized social network effort. The new hire said, the really powerful thing about Twitter doing a decentralized protocol move is that if you design a protocol that works in an ideal way, you don't have to go through the initial effort to find the niche to bootstrap, because Twitter will have so many users. This is a really good way of saying network effect. They won't have to go from ground floor. They can just pivot Twitter users right over to Blue Sky and immediately create value. Social networks don't work without the network effect. It's been shown time and time again that you need people on there to get people to stay on there. And it's in feedback loop. The real thing that was interesting I thought about this article was that a decentralized social media protocol would allow for individual networks to govern themselves. I don't know how I feel about this totally, because as you've seen people react on social media amongst themselves in general, they cannot be the most civilized, especially when it comes to being anonymous. People will become trolls and can be very hateful, and letting them run themselves may not be the best idea. Reddit does it in a slight way by having subreddits and having moderators that moderate the subreddits and make their own rules and govern themselves. But Reddit in general can shut down these subreddits or can step in if they see something they don't like being played out. Because in recent events with viral, with Melina Kunis and Ashton Kutcher going viral, I can see a decentralized network just banning them because they don't even want people that don't shower on their network. But depending on how they build the decentralization, it could be a positive thing if they actually give back to the data back to the users, and the users get to control their data with tokens and something or around that nature. I think that this could be a really promising project. But if it's just something that the users run the network themselves, I don't know how well that will stick. But we'll have to see it play out. And thank you everyone for tuning in. Our next episode will be Thursday, August 19th, and I'll see you then.